All right, home loan shoppers, welcome back. Welcome back. Please reference the course outline next to my head here, and you will see that we are in Chapter 2, Where to Shop for a Home Loan. We're in Chapter 2, Section 3. We are going to talk about the lenders. If you just happen to run across this video, this is part of a home loan shopping course. In the description of this video, the outline next to my head is hyperlinked and in the description of this video. So you can go in there and click on any section you like, go back and start from the beginning or jump around however you see fit. Okay, so let's go ahead and get into section 3, talking about 3 pros and 2 cons of working with a large lender. All right, let's get right into it. So pro number 1, I'm going to say consistency. I call it the In-N-Out burger effect. That is what you'll see a lot of times at these large lenders. I would say all of the time at these large lenders, what they do is they have a limited menu. They might have more products than what they normally will advertise, but they try to stick to the products that they advertise. Very, very narrow product offering, like the menu when you go into In-N-Out. So as a result of that narrow product offering, they're doing the same loans over and over and over again. And as a result, just like those burgers at In-N-Out or Five Guys, whatever professional burger chain you go to, they get really good at doing those burgers and fries and shakes over and over again. These lenders with their limited In-N-Out menu, they're doing those time and time again, and they get really good at doing those, and the consistency goes up. So all the employees they work typically in these large central retail platforms where all the employees work out of 1 or 2 buildings right next to each other, doing the same stuff over and over again. So their level of consistency goes up. And so what that creates for you, the customer, is that when you call up that lender like that, one of those large big box lenders, you will usually get the same experience. No matter who you're working with, usually. Not always, but usually they are really good with that consistency, and they typically will always, they provide a high amount of training at those lenders. So the people get good, they're providing a lot of training, and they're doing the same thing over and over again, and they're all typically in 1 central retail or 2 large central retail locations. So that consistency translates over to the service to the customers. So you get like a kind of like a uniform experience. Like if you go to one Target, your experience, with a few exceptions, your experience is going to be the same at another Target or at another Walmart. That's what they kind of pull off at these big box lenders. So consistency would be pro number 1. Pro number 2, low prices. You're going to find that for these, and that's in particular the loans that are not in the jumbo category. You're talking about high balance and conforming loans. We talked about the pros of the dealing with the big banks in the section 1 of this chapter, and we talked about the jumbo loan pricing advantage at the big banks. Well, at these large lenders, these conforming loans and high balance loans, below the jumbo threshold, they will kick butt in pricing. Definitely usually kick the bank's butts in pricing. With the brokers, depending on the broker smaller brokers can kick butt usually on everyone, but then again, you also have these smaller lenders. Like a lot of people don't realize these lenders come in different sizes, and the Costco effect, the Walmart effect, that doesn't apply in the mortgage industry. So typically in the mortgage industry, the larger the company, the higher the pricing. You have these lenders that are big right now, but at one time they started off, they actually have more aggressive pricing than they do. Because once they get large, they incur tremendous amount of expenses, and those expenses, a lot of it's marketing that has to come out in their interest rate pricing. So you'll see smaller aggressive lenders will have way sharper pricing than these big lenders, and smaller lenders are hard to beat. But smaller lenders are also hard to find. But low prices, though, overall, lower prices, definitely lower at the bank, lower than the bank's high balance and conforming pricing, or non-jumbo loans at the lenders. They're going to typically have more aggressive pricing. Okay, next, the final pro number 3, and there's a button here, typically way faster service, way faster service than working with a bank on their refinances. Typically, lenders will usually blow away the banks. Now, there's some exceptions, like when they get a huge pipeline, when they just get inundated with a ton of loans, especially like they did during COVID. During the COVID rush, they were slow as molasses, like the banks. Well, the banks were even slower than that. But usually the lenders are really fast on their service levels, definitely compared to the banks. Typically on the refinances, the banks will, like I mentioned during the bank one, the banks are way more aggressive on their purchase loans. But on the refinances, you'll find the lenders way faster service. So those are the 3 pros in dealing with the lenders. Let's talk about a couple cons in dealing with the lenders. So one of the cons, a lot of these big box lenders do a tremendous amount of volume, and with the tremendous amount of volume comes way less than personal service. I mean, you pretty much become a damn number. And you start off with one person, your loan originator, and a lot of times you just literally never hear from them again. It gets passed on to a processor, and goes to different people after that, because they set up like an assembly line service when they're doing this high volume. And once the loan originator is done, a lot of times the loan originator doesn't even talk to the customer again, which really sucks. So service levels can seriously decrease, even when it's not as busy, because they set up that assembly line format. The service can still have a level of being impersonal, but especially when they're doing high volume, you just basically turn into a damn number at these big box lenders in a lot of cases. So the personal service just goes down the toilet with higher volume quite often. The con number 2, now this is a touchy one right here, limited amount of experience. Well, these big lenders, it is nearly impossible for them to field a team of all experienced loan originators. It's like pretty much next to impossible. It is hard to hire and hire and retain good loan originators as it is. A lot of them bounce around from company to company, it's hard to keep them there. So a lot of times these large big box lenders will have, like, say 20% of their origination team are seasoned people. 80% are some of the people that are just coming in and out, that lack experience, but they don't have to have that much experience, because like I mentioned, they set it up like an assembly line. So like an assembly line, say you're at a restaurant, your job is to flip those burgers. Well, and you're doing that burger flipping all the time. Somebody else is doing something else. Somebody else is doing something else. It works that way at those big box lenders. They set it up like that assembly line. And what it does is what they know well, but they know well right within this little tiny frame of work. And outside of that frame of work, if they run into something, they don't know it. Very, very limited knowledge outside of what they know, and that could be a real big problem if you're trying to work with them and your situation does not fit within their little field of view. You're going to get a sucky service. You're going to get loans being declined when it shouldn't have been declined. The only reason it was declined because of the knowledge of the person that you were working with, because you were working with something outside of their little field of vision. So those are three pros and 2 cons of working with the the lenders. And this video should go on to the next section of the playlist. If not, please reference the outline here in the description of this video so you can click on the next video.